Um, Okay, so today we'll be talking about introduction to MT5, introduction to MT5 and trading view. All right, so let's just take off so many. Um, all right. Yeah. Okay, so first things first is okay to know why trading view is important. And well, before you trade, you must first understand where the price is going, right? So this is actually where trading view and MT5 comes in, right? So in essence, trading view is for your analysis, MT5 for your execution, right? Trading view is to place your trades, MT5 is for better chart tools. Mr. Fetching, you asked how I use some of the tools I use. Yeah, that's because um, I have all of them on TradingView. Of course, you are limited to some extent because if you don't use the paid version, right, you'll be limited. But even in that limitation, you can still maximize it to the fullest, right? So, TradingView has a clean interface. You can modify, adjust however you want. For MT5 is basically the broker connection, right? What you're seeing is whatever the broker shows you, basically, right? Um, so that's just it, right? So this is a beginner course. So I'll just run through this, then go into some analysis, right? Or trying to practice what we just talked about, right? So TV or TradingView is a chatting platform, right? You analyze the market, draw support and resistance, study basically for backtesting, seeing the behavior of the market um, over time, right? So let me see who else on this call. All right. Okay. I see you. So this is the first time. Okay. But am I clear? Am I clear? Am I clear? Am I clear? If I'm loud and clear, please indicate in the chat box. If I'm loud and clear, please indicate in the chat box if I'm loud and clear. All right. Amazing. Okay. So now, candlesticks, cross pairs, right? So I'm assuming we are all beginners on this course. So I'll just go through it, right? Training view, if you're using your laptop or your smartphone, however it is, this is where you see list of the currency pairs, right? Or if you want to search up or look up in, yeah, you can easily, if it's on your laptop, you can easily just type, right? Type the pairs will show themselves, right? Time frame, time frame is important because whatever you're trading on, let's say, whatever you're looking at depends on the time frame, right? Let's say this is daily time frame. This is the depending on what you're looking for. This is a monthly time frame, all right? So every candle here is 1 month. So these are like years. This is actually what we're good. Where the worth of USD was as of 2020. Yeah, as of 2020. It also came back. So this is just um what it is, right? So let's go into, let's look at Euro USD, right? Now the one the money time frame. This is the daily time frame. This is you looking at the daily time frame of Euro USD, trying to analyze, okay, where is this market going at? Where is the possible direction? Yeah. Is it trending downwards? Is it trending upwards? Right? So are you seeing any reason for the market to go up it more? Are you seeing reasons for the market to go down? That's what your analysis is, basically. Right? So sometimes you've heard the statement that Forex is Bet Niger that went to Harvard, right? Or glorified gambling. No, that's not really the case. Yeah. Gambling means placing, or let's say casting luck. There's no luck here. You're going through series of analysis to make an informed decision, right? So you analyze, you don't gamble. That doesn't mean that some persons don't gamble in the market, some gamble, right? But if you have to be profitable, right, you have to analyze and not just take trades for sake of taking trades. You understand? Sake of trading, taking trades. Now, the reasons, there are other chatting platforms, right? But TradingView is like the most, I don't know how to put it. It's really easy to use, right? If you've ever encountered crazy charts provided by, if you trade, what's it called? Maybe binary, where you have to work with the chart given to you by the broker. There's some brokers that their charting system is crazy, right? So TradingView is actually very, very good. Now, let's using this analogy, yeah. The price, this is the price. The price is like the car, yeah. Resistance, support. Support is the floor, resistance is the ceiling, right? Then trend is the direction. So, assuming you're traveling from Lagos to Abuja, right? You need a map. So your chart is like your roadmap. You need to know, because if you're doing analysis and you don't even know where the market is going to, it's best you don't even trade, right? But if you can see directly, okay, this is where I'm seeing this market going to. Then is first thing first is to know where the market is going to. The second thing is to know where to enter. Okay, let me put it this way. First thing first is to know that you're going to Lagos. The second thing is to know the airport to go to, or the park to go to start your journey, right? So if imagine you know the park to go to, I don't even know where you're going to. It's crazy. Imagine you know where you're going to, and don't even know the park to go to. It's messed up. So you need all this regardless, right? So the same thing applies to trading, yeah? You need the charts to know where price is going. Right. It's crazy, man. It's crazy. It's crazy. It's crazy. Okay, look at this other analogy. Yeah. Like if you're in the healthcare system, um, the chart is like the heartbeat monitor. That P. You can see maybe whether the person's heartbeat is getting better or getting lower, right? The doctors use those heartbeat monitor to know your heart, whatever, whatever. Yeah, traders will use the chart, you know whether, oh, this guy's okay. There's a reason for the price to go higher. There's a reason for it to go down, right? So all of this matter. Now, sometimes those that use their smartphones might say, oh, yeah, it might seem easy for you because you're analyzing from a laptop. How then do I maximize all of this with my smartphone? Yeah. For a very long time, I use my smartphone to do my analysis, right? The most important thing you do on your smartphone is to know when to turn it to landscape, you know? And sometimes the landscape can give you enough view. Landscape, don't flood your, see how clear my chart is. I just leave, not like they're not important indicators, right? But when you want to do proper analysis, just turn off the indicators. Do your analysis. Once you're done with your analysis, you can now turn on your indicators to see if your indicators align with your analysis. Or maybe if there is a little adjustment to now make. But the most important thing, like I'll tell those that use indicators, yeah. Indicators shouldn't be the the run to. You just jump in, okay, if this balloon, what's it called? If this EMA crosses down, I'll sell. If this one happens, I'll buy. Now, you do analysis first and make sure whatever you're analyzing aligns. After your analysis, you're like, okay, let me turn on this indicator to see. And if at the point of whatever rule the indicator has, maybe let's say you're expecting a sell at a particular point and there's a resistance there and you marked up that resistance, you're like, oh yeah, this is valid. So at this particular point, I should be selling because this is happening, right? So you don't just blindly looking for the, what's it called? What's the best name to give it? The, the holy money grail indicator that will give you all the money. All you need to do if this one appears, you just sell. Just like that. What are we doing here? Everyone trading FX will be multi-millionaires, right? But it doesn't work that way. When you use indicators, you're just using, it's called the mathematical approach in trading. You have the technical and the mathematical, where you get to do some calculations rather, yeah, for them to align with the price, right? So that's just what it is, right? So I was talking about smartphone. Yeah. So what you need to take advantage of when you use your smartphone is knowing how when to zoom out, zoom in, right? Sometimes, right, to increase the, what I say, the height of your chart, all you need to do is just to, you see where these prices are, yeah? Keep your hand there. So instead of my mouse, it's your hand, right? Swipe up, swipe down. It simply does that for you. Swipe up, swipe down, right? So it doesn't get so difficult. If you have a laptop, that's a win, or that's better. And anyways, you don't always carry your laptop out all the time, right? So sometimes you might need to just start at the charts on your phone to get some entries or just to observe, right? So that's just basically what it is, right? So in essence, right, we understood the difference between TradingView and MT5, right? Though some persons do the analysis on MT5, that's still cool, right? But it's basically, in fact, some brokers, since they know that MT5 is so good, they actually embedded their brokers on MT5, right? If you're using your laptop, you're gonna see these are loads of brokers. Even the almighty Binance is right here. Right? So if you trade with any of these markets here, this can help you do what you do in MT5 right from TradingView. That is taking trade off TradingView, right? So this is TradingView's paper trading broker. So this is more like a simulation, right? If you don't want to do it via TradingView, via MT5, you can use this. Let me see if I can get into it. Yeah. So you can use this to take your trades, enter for your buy, your sell, whatever you want. Let's just do a little practice. Let's say you're expecting a sell right now. This is sell, let's say 10 units. Uh, you place the sell. Okay, place the sell. Adjust your TP. So you want your TP right here. You want your SL, yeah. Right, wherever you want to be. You confirm. So, so right now, you have a trade running. This can also help in your backtesting, right? That's if you don't want to do it on, or if you don't have access to a demo account for your practice. You can maximize, but it's best to use for this. What I'm showing you now is best to use on the laptop. I've not actually been able to use it on my smartphone. Right, so this helps, right? This helps. Do analysis, you can just place the trade, come back, see how you played out, right? So these are the advantages of using TradingView anyway, right? So that's about that. Any question on any of this I've talked about? Any question, area of concern? So we break it down together. Any area of concern, so we break it down. This is an area of interest. Okay. Well, it's if first of all, I'll say if you're not so familiar with taking trades on trading view, it will be so difficult for you, right? Now imagine so I will still say from my own experience, I will say taking trades on MT5 is better. Now let me show you an example, right? You wanna place you wanna place I wanna get like a limit order or something. Let's say you wanna buy if you wanna go for a limit order, right? A sell limit perhaps. You tap on the sell. You can see the modalities here. Can set to adjust the limit order. This is the daily time frame. Let's say you know the price, or you set to adjust the limit order to this very point. Now, where the problem is the unit. Now, can you tell if this unit is like lot size? You're confused. So you're using two units to get into the trade. Let's say your SL is um I and to calculate this thing well. 918 should be okay. Okay. And your TP is somewhere wherever down here, right? So let's say the price for your limit order is um, 4,948.80, right? That's the price for your limit order. And your stop loss is 498. It's like 4880 to 4,980. This is like 100 points, right? This is like 100 points, 100 pips or 1,000 pips, whatever the case is. And your TP is 4780. So this is like 1:1, or you can say 4680. So now the risk with the unit you have here is like 19, 19, 19, what's it called? $19, right? So if you have for your entry with the 100 points, look at it's one unit, 100 points is giving you $100, right? So this one unit, so I'm now explaining because I have an idea, right? So imagine I have no idea how these calculations go. Normal, basic, beginner, or intermediate trader might be confused, right? So apparently this 1 unit is actually 0.01 lot, right? Because this is 100 points SL. That's $100. Is because I already know that 100 points with a 0.01 lot size is going to be $100, right? And 200 points or 200 pips, some will call it 2000 pips anyway. 200 points of 0.01 will be 200, like you're seeing here. So 1 unit is equivalent to 0.01. Someone that doesn't know this will be confused. Like, what is unit? Right? So if you're using 10, 10 is simply 0.1 lot. 100 is the one standard lot for your MT5. 1000 units is actually 10 lot size on your MT5, right? So if that's what it is, you click on the cell limit and it activates. If you don't want that, you simply close, um, cancel out, right? I saw something coming up here. Exactly. So, so that's been explained to you now. Right? Imagine you have no idea, you'll be so freaking confused. And now these calculations here, they vary with currency pairs. It's just that I trade gold majorly and some what's it called? Some of these stock indices, right? I've known the exact price value of certain pips depending on the lot size I'm using, right? For all these other forex pairs, their calculations are different. So you need to understand what you're risking for 10 pips of 0.01 on GBP USD. Of course, 0.01 GBP USD, whatever is giving you, is not the same as 0.01 of gold. 0.01 of gold for 10 pips is $10. For GBP USD is like 0.1 dollars or so. You understand? So that's just it, right? That is just it. So let's do. Mm, So that was a crazy. Should I be doing analysis or if you have more questions, drop it. Yeah, if you have more questions, drop it while I look at the chart. Okay, this is a clear uptrend, right? But the market has passed an area I marked as a resistance point, which is this area. We got to this zone, of course. So this is an FVG. We're not here to talk about FVGs, but let's look at the charts together. At least we still have some time on the session, right? Give us a higher dropped, played around a little bit, then broke this zone. So the market is actually highly bullish. Now, I drew up this mark here because that's my next target, right? I think I drew this when the market was still perhaps around here, right? So my next target is this imbalance over here. For it to make sense, let me just delete this one. This is an imbalance, right? I'll call it an FVG. This gap right here. If I'm to check how long or how large this gap is. So what I just picked now is a measuring tool. This tool is to help you measure the size of candles, the size of movements, or basically the number of pips involved, right? So I grab here and take to this point. So this is like 77 points, 77 pips, right? I'm calling it pips because I choose to identify it as pips, right? Normally, what you have there is like 770 pips, right? So I just choose to call it that way, right? So 77 pips or 77 points. What did I mark? I marked this, the beginning of this very candle, right? The low of this candle and the high of this one. So the gap between this and this is 77. This is very large, right? This is like very, very large. right? And there's no how the market will ignore this, right? It has ignored it for this happened when 18th March, right? This is like 2 weeks after, or let's say 3 weeks even, and the market is trying to come back up into that zone. And it has broken this. So what I'm expecting now is, and a gap was created still, right? A gap was created, of course, 12 a.m. today, when the market opened today. So is there now the probability of the market coming down to cover this gap and coming back up is where the matter is now. How long will it take for the market to come back to cover this gap before going on, right? That's where you weigh options, right? Because certainly this gap will be filled. It's a question of when, but will it be filled? Yes. Now the question now is, will the market want to tap into this FVG zone before coming back to cover this gap? Because look at the market close here, opened right here. So it did a little pullback, but this gap needs to be filled regardless, right? So this is like a gap up, a market open gap up, or it's a gap up basically. So now the question is, would it do this move coming down, or will it first of all cover this gap before tapping into this area, right? Well, that is where your what's it called, Fibonacci might come in, right? So coach has been talking about the Fibonacci golden zone on his 11 a.m. sessions. All right, so that will also help you. Okay. Now let's say this is the lowest point that gave rise to this highest point here. So all I'm going to do is to pick my Fibonacci tool, right? Place that this tip. We're just doing analysis here. Like I explained, analysis is to know, first of all, where the price is going to. Now we've determined where the price is going to. Now, where is our entry? Determine where we are going to. We want to go to Dubai, right? So which airport are we going to use? That of Abuja or Lagos? But if you're going to Dubai, Abuja will be costlier. If you've tried it. Lagos is cheaper somehow, but let us know the one that will be better for us, right? So I've drawn my Fibonacci from the lowest point to the highest point. Now, Fibonacci is simply a retracement tool, right? Telling you where the market can retrace to before continuing a buy move. So with what we've plotted here right now, there is a high probability of the market to get into, in fact, this is the Fibonacci golden zone, right? But I rarely look at it as a golden zone. I just look at it as an area below the 50%, which is very valid for a buy opportunity, right? Which is very valid for a buy opportunity. Now, if I'm a swing trader, I'll just place my entry right here. I'll place my entry right here. And of course, waiting for the market to come in. Then I shoot into this FVG, right? That's what I'm going to do, right? Because this is, like I said, now the question is, does this happen all the time? Does the market always tap into areas below the 50% before going up? Well, how can you tell? You cannot really tell, except using the data of the past. So let us go back into the past to see how the market behaved, right? So we have a zone already. Let me mark it out. I think in this case, I would resort to using this former one as my new zone, right? I just mark it out and just keep. This is analyzing and breaking down the chart and knowing what to expect. Right? So now, let us go back into the past. Now, let's look for the lowest point that gave rise to the highest point right here. We can say this low to this very high. So let us drag our Fibonacci tool and say, okay, this is a high and this is a low we decide to work with. Now the question is, Was the market able to tap into area below the 50 zone before buying? Well, hell yeah. This is the 50%. The market came even as low as almost 80 something before going back up. So if you're trading, you place your entry here, had your stop loss. That's if you're a long range trader. Place your entry here. And even looking at itself, let us look at this together. Now, that is where analysis comes in. Analysis, you don't just base your decision, right, on one particular thing. You base your decision on multiple confirmations. For this one, I hope the chart, I don't know, hope it's not too messy, right? For this particular zone we picked here, right? This is our area of interest. That's number one. Number two thing is that it's also the same area that has the gap that the market created. That it will be sound enough when we say that, okay, the market is expected to cover this gap before we take our buy. So your Fibonacci entry is exactly where, right, the gap was created. So the market coming to this zone is serving two things. First of all, giving a healthy retracement. Number two, covering the gap that was created. That's valid. In fact, I can add number three, which I'm seeing here still, an imbalance. An imbalance. There's also an FVG line here. So this actually, you can have, we already have three confirmations telling us that this is a valid area for a pullback to happen. All right. So now coming back to this particular one, remember, this is our low, this candle right here, and this is our high. I don't want to draw so many lines here. Now, our 50 zone, let me mark the 50% zone. So let us know this is our 50% zone, right? Area below the 50%, or let's say the golden zone, basically, right? So the rule is only entertain buys below the 50%, right? So the market, now, let's say the market was still around here. I've not seen this move has happened. Now, what confirmations will I hold to say that, yes, I'm actually on the right track? Number one, of course, the 50% is your one. Number two is this fair value gap. Oops, let me delete all of these things so they don't disturb whatever I'm doing here. Right? These are the past and the past is the past. Right? This is an FVG. Remember, this is an imbalance, right? The low of this candle and the high of this is an imbalance. So our area of interest is lying within an FVG, right? And even below the FVG is another area of interest. Now, I don't know if I've showed us double FVGs or inverse FVG. Inverse FVG is a fair value gap that's a fair value gap that failed, basically, right? Inverse FVG, or where you have two. Okay, wait, this is not actually giving me. I'm looking at this gap here. Mm, and then I think on a later day, I'll break down this inverse FVG for us. It's also a point of interest, right? So imagine we have this, our FVG one, we have the area of interest two. Number three. Look at this. What happened there? Market came here, went back, came here again, went back, came here, went back, came here, went back, then broke. So automatically, this area, or this zone rather, let me see if I can mark it. This zone rather is what? Like someone should tell me what this zone is. Like this zone I marked now, if someone is following. Like what is this zone? Is anyone following? This zone I marked. What is it? Amazing, Right now, you're getting the third confirmation. This is a resistance that was broken. And what happens when a resistance is broken? It becomes a support. You decide to extend it. Boom. Now you are refining your entry, telling you that you now have three confirmations. If this was a former resistance, then it's going to be a new support. So then, that's good. The only thing you need to do is to have a healthy stop loss to accommodate whatever excesses of the market, right? Because if you're having your stop loss, you need to consider this lower FVG too, because it's like a magnet that can still attract the market into it. It needs to be balanced out for that big move you're looking at to happen, right? So let me delete this. So you see, we've gotten our third confirmation, right? You decided to go in right here, of course, with the level of what everything you know, basically. You have your stop loss below this point because you don't want to get caught up in whatever that will happen inside this zone. You enter right here. Let's say, place your, of course, place your buy limit around here at the tip of that resistance, which is to become a new support. Have your stop loss below this candle. But like, however it is, the market coming down here is like, if the market breaks this low, that means it's an invalid trade. And if the market breaks this low, it's heading to almost the 100%. So you can better say that there's no retracement happening. The market is just reversing, basically, right? Where is your TP? Your TP can be the former high, right? So this is like good 2.6 per hour. You're risking 74 pips for 195. And did the market play out like that? Yes. Though it dangled for like days. It's like from 2nd April, before hitting your TP. Because it hit your TP last night. So it took you like roughly 5 days to hit your TP. So this is actually a very good trade, right? Because um for a 0.1 loss size, this is $1,950. For one standard lot, this is $19,500. So is it worth the wait? Yes, it is. Right. So that the same thing we did here is what we're about to do here right now. So that's it. That's it for today, family. Hope you got something of this session. Of course, we'll continue again tomorrow. Right. So today is about chart analysis and taking advantage of it. Right. So cheers. Tomorrow is another day. Anticipate, practice, practice, and practice. Right. So cheers.